Good afternoon, everyone. Thank you guys for joining us. This is our webinar series on supply and logistics mastery, really optimizing the entire fuel supply chain. And this is our third and final session of this series, which is really driving financial accuracy, optimizing BOLs, and invoicing reconciliation. So certainly appreciate everybody's time in joining us today. I'm Brent Puzak. I'm a senior solutions consultant for Titan Cloud. Been with them a little over 4 years, right at 4 years now, but been in the industry on the retail side, compliance, fuel, maintenance, construction for over 25 years, just managing anywhere between small, mid-sized companies all the way up to larger enterprise companies. So certainly look forward to kind of sharing a little bit of my experience here with you today. And I'm turn it over to Nick, who will be also one of our co-hosts here today to share a little bit of his background.
Yeah, good afternoon, good morning, everyone, depending on where you are in the world. My name is Nick Viola. I'm the Director of Solutions Consulting, and I work very, very closely with Brent. And, I started my career off as a nuclear submarine officer, and I've been in supply chain, technology, and fuel, and really helping companies transform with data, technology, and processes from their current state to future state. And I'm really excited to walk through our webinar today and showing you how one part of our supply and logistics solution can help you.
When you think about Titan, we've been servicing customers successfully really since 2012 and maybe even a little bit before. And now we've gotten to a really exciting place where we're servicing over 85,000 sites across various segments within the fuel markets. And ultimately, we have about 50% or a little bit over 50% of North America fuel operations that are on our platform, and we service about 700 customers on a global scale. Our clients range from the biggest enterprise C-stores like 7-Eleven to some of the biggest international operators like Circle K and EG Group. And then we're all across the mid-market C-store space. But really, no matter the size of your company or how you're structured, Titan Cloud, we're really purpose-built to address all of your needs from compliance all the way across the fuel supply and the logistics space. When you think about the problems that we're helping customers solve, they're really based on the complexity of the supply chain and the way companies are structured to operate in that environment. That's typically driving really a lack of connectivity, visibility, and control over the fuel assets that organizations have across their infrastructure. And when you think about it on a downstream basis, we see kind of this inherent risk where storing fuel that comes with regulations and requirements to ensure that organizations are protecting the public. Then in the dispensing of the fuel, that really encompasses really several stakeholders. It could be third-party vendors, customers, and internal teams such as like fuel maintenance, accounting, and environmental teams. All of these teams having different, really, but similar or related goals and problems that they got to figure out how to overcome to ensure that their business is operating effectively. When you think about this too, like maintenance teams, you could have a nozzle issue at one of your locations where that nozzle's been down and it's impacting the fuel throughput and the revenue at that location, and even more broadly across your whole organization. So lastly, if you think about the upstream segment of your operations, you've got the supply and logistics of the fuel. The focus of the webinar here is really around that supply and logistics functionality and how you get fuel from the terminal to the storage tanks at your locations in the most profitable and executable way possible, while your teams are kind of dealing with real world constraints like demand changes, allocations, fleet and carrier changes, and really everything in between those aspects. And I'll pass it over to Nick here to talk about some of the solutions we have.
Yeah, no, thanks, Brent. And you're exactly right. So our entire webinar series is about diving deep into this solution that we have for supply and logistics within our platform. So our solution touches really from the start at the terminal all the way to the end at the dispenser, to include all the data for the back office management and invoicing. So in some, whether you're a hauler, a carrier, jobber, wholesaler, retailer with your own fleet or using a carrier, a car rental company, construction company, logistics company, if you utilize fuel, our solution helps you really increase revenue and drive down costs. And we do that through 4 different modules in our solution. So we start with the supply management, which deals with contract and allocation management along with Best Buy. So how do you take advantage of off-contract rack pricing? And that was really a part of our first webinar. The next solution is forecasting and inventory management, where we take product or tank consumption to create a forecast and then auto-generate orders based on that forecast. And then once those orders are generated, we prioritize them, and then they go into the dispatch and logistics solution where teams can dispatch to their own drivers or to carriers and really track that in real time, the status of those deliveries. And then both forecasting and dispatching, those were the focus of last webinar. So finally, what we're going to talk today to close out our series is the exception management and reconciliation. So as your operation is running, the data within our platform and solution is connected and collected across everything. And that's going to feed into our exception management system that then reconciles deliveries in real time and alerts users when issues arise, such as a missed delivery, a cross drop, or wrong drop, or anything in between. So we're going to be spending our time today focusing on how Titan Cloud helps you drive financial accuracy. So over this webinar series, we've been kind of building on the goals and objectives of each of the stakeholders. And so here we're going to focus in on accounting or billing. But in total, what we've seen across the fuel industry is that there are 4 major stakeholders involved in the fuel strategy and operations. So each of these stakeholders have their own strategic objectives, but they're very, very closely linked together. And so you have the business or business leader that's really focused on the P&L and balance sheet and cash flow statement. The fuel supply team is really focused on the buying strategy. And then the dispatching and logistics team is focused on executing that strategy within the operations. And then finally, all of that is connected to the billing team, which brings together the fuel strategy and execution into the financials, the P&L, the balance sheet, cash flow statement. So the supply team, they're leveraging those contracts and spot buys, working to secure that best price and availability, while dispatching then orchestrates that fuel movement by optimizing the lift and delivery at the various locations, all trying to minimize freight costs. So they aim to cut those freight fees, really reduce miles driven, and avoid any delays from unavailable fuel at terminals. And so together, these teams support business leaders focused on, again, the company's P&L, cash flow statement, balance sheet. And they're balancing these 2 main objectives of net profit and working capital. So poor inventory management or spikes in costs can really impact your cash flow and profitability. And ultimately, the coordination between dispatch and supply teams determines the business's ability to grow and invest and really thrive. And so it's not just about buying and delivering fuel, but making sure that every drop that is handled in the most cost-effective way possible. Now, when we add in billing into this equation, things become a little more complex. So billing is playing that essential role in bridging the efforts of both the supply side and the dispatching team with finance. So for the billing team, every action taken by supply and dispatch is a direct input into their process. They rely on timely and accurate data about where, when, and how fuel was lifted, such as costs, delivery location, timing, quantity. And so really billing's focus is on precision and speed. They work to ensure that those invoices are sent promptly and payments are made efficiently and effectively. So as the final step in all the financial statements in that process, billing closes that loop. And so by aligning all the data with finance, billing ensures that the numbers on the paper reflect the reality that's in the field, reinforcing the organization's profitability and cash flow. So It's in total, each team plays a very critical role in achieving the company's goals. The supply side, they drive the strategy for fuel. The dispatch goes and executes it. And billing ensures that the financials align with everything. And so without the integration between these teams, costs could really balloon and profits could erode and growth ultimately hindered. So the interconnectedness of these teams really underpins the business's capacity to grow and compete effectively within the market.
So let's dig in a little bit on the current state of the industry, what we kind of see across the companies we work with. We typically see that the link between the supply, dispatch, and the logistics teams are really fractured. And this disconnect begins really with the technology and the processes that each one of these teams are currently using. If you think about the supply team, right, they're usually manually tracking allocations by logging into the supplier's website, to check their lift volumes, then transposing that information into spreadsheets to manage allocations across their terminal suppliers and their products. And when capitalizing on rack pricing, the process is also very, very manual. Collecting pricing data and calculating profitability off contract, it can be very, very difficult. The dispatch team, meanwhile, often relies on separate point solutions like software or Excel sheets. These sheets are not always integrated into the supply system, and they lack up-to-date forecasts and the ability to prioritize loads and locations. Dispatch also relies on manual methods to fill these systems gaps, especially in real time when real-time changes are occurring within their operations. For instance, if a driver needs to be redirected due to an over-allocated contract, the process typically is very slow and inefficient, risking really delays and ultimately higher costs of their operations. This disjointed system and manual process, that creates really significant limitations both within and between the teams that are managing your business. Communication between fuel supply and dispatches is typically sluggish and normally prone to errors, leading to limited allocation visibilities. This typically is particularly problematic when multiple loads are assigned to an overallocated contract, as the supplier site typically won't reflect loads that are dispatched but not yet lifted. The dispatch team's point solution also struggles with near real-time changes, whether tracking split loads, responding to demand spikes, or handling large changes that disrupt strategic goals like minimizing freight costs. This disconnect not only impacts operational efficiency, but also risks the strategic objectives for everyone involved in the process. Increased cost, reduced profitability, and higher working capital all stem from these broken links in communication and process, causing significant financial challenges for an organization. The billing team in particular is directly impacted from these inefficiencies. Without accurate, timely information from supply and dispatch, billing faces difficulties in precise invoicing and making accurate payments. A broken link here means that invoicing errors can occur, leading to rebilling efforts, which drive up operational costs. This is especially critical when it comes to cost of goods sold. If mistakes go unnoticed, the company risks overpaying for fuel or freight, directly impacting profitability. Additionally, rebilling and delayed corrections slow cash turnover, impacting the company's liquidity. Billing needs real-time data on lift volumes, cost, and delivery details to ensure a seamless process. Otherwise, inaccuracies cascade throughout the financials, hurting cash flow and also profitability. Billing as the final step of the P&L process effectively closes the loop on financial accuracy. Therefore, ensuring accurate, streamlined processes between fuel supply, dispatch, and billing is essential to achieve cost control and support overall business growth. In sum, every team plays a critical role, from supply setting the strategy to dispatch executing it and billing validating financials. When these processes fail to connect, operational inefficiencies and financial risks threaten both the company's competitive edge and overall the bottom line. So let's talk a little bit about the complexity of what makes fuel management even more complex. And it's really around the execution of these various business models that companies have. So, companies that manage their own inventory often operate across really three primary models from what we see, right? They're using internal fleets or relying on external carriers, or maybe they have a mixture or a blend of both internal fleets and external carriers. Additionally, the companies that rely on haulers and carriers for inventory management, they face their own challenges as the carriers may use internal fleets and at times other carriers in parallel. Managing the data, resources, and information between these models demands skilled team members, robust technology, and clear processes. Let's start really by examining company managed operations. While this model often offers high control over operations and data, it brings its own challenges like managing schedules, adapting to real-time changes, and ensuring all data is collected accurately. This data then feeds into billing, which is crucial for billing accuracy and even future optimization opportunities. In a company managed model, knowing when, where, and how fuel is lifted and delivered is foundational, especially when accessorial or surcharge fees come into play. For companies that rely on haulers or carriers to manage inventory and deliver their fuel, this can reduce the company's overhead, CapEx expenses, and ultimately reduce risk for their clients. However, this model introduces unique challenges as the carriers must balance client-specific parameters across multiple locations and often multiple clients with diverse needs. So coordinating between separate companies and systems adds complexity to collecting and transferring accurate real-time data, which is critical for the billing and client optimization. And Nick, I think you were going to have some additional input on the client billing teams.
Yeah, absolutely. So really this brings us to, again, the critical role of the billing team. So it's not just about processing payments and sending invoices. It's ensuring the accuracy of every detail involved. So billing really requires that visibility into the quantity of the fuel delivered, where it was lifted, who supplied it. And so that they need to know the contracts, which ones were leveraged or if spot buys were made. And they really need to capture, again, those accessorial fees such as demurrage and even surcharges, along with any freight changes that may happen or even applicable taxes. So if those costs are missed or miscalculated, again, it goes directly to that bottom line, whether you're doing accounts receivable or accounts payable. So this precise and comprehensive data that they need really allows them to bill the correct amount, again, avoiding costs and then also on the billing side of the accounts receivable. So the inaccuracies really lead to a series of other costly consequences, which we've gotten a couple more responses in our chat around, like quality of data, especially from freight providers, and how much time or additional corrective information needs to happen. So that's exactly right. So other costly consequences that happen in the back end on the operational side within your business is rebilling efforts and adjustments, and that's impacting your OpEx. So accurate real-time information is essential for that billing team to ensure timely and precise invoicing. Again, those specific strategic metrics that they're working on. So whether operations are managed in-house or through carriers, you have to have that data accuracy. And so every detail from delivery locations, quantities, applicable fees like pump outs, contract terms, those all feed into billing and impact all of your financial statements. And so what we're trying to focus on in the next couple of slides is going to be, how do we link these together? So ideally, again, these three teams of fuel supply, dispatching, and the back office need to work together to maximize profit. But again, in today's world, kind of blocked from achieving those goals because of disconnected and siloed technology and processes. So what we're going to do is we're going to figure out how we address these gaps across the fuel supply, dispatch, and back office functions, again, which is essential into achieving that profitable fuel management process. So we're going to go to the next slide and jump to Brent here for a second.
Yeah, so let's talk through how Titan Cloud helps address better coordination and ultimately reduce time it takes to discover discrepancies and issues even after the fact. We start with our platform approach, which allows control of the data, especially as changes happen throughout the day. Titan Cloud connects supply data directly to dispatch and logistics, which enables a seamless collection of data to feed into the invoicing process. Next, we utilize an exception-based approach, enabling management of exceptions to as close to real time as possible. Now the billing teams reduce the number of transactions needed to be manually touched and evaluated. By focusing only on automated alerts and exceptions such as delivery variances, duplicate invoices, and missing data, teams can streamline workflows, focusing their efforts where they're needed the most. This proactive notification system empowers your teams to address discrepancies immediately rather than waiting until after they have impacted your bottom line. Another important capability is the configurability of our system. The system can be adapted based on the needs of an individual user, meaning that the alerts and the exceptions can be tailored to each team's specific priorities, whether it's the dispatching team focusing on delivery variances or the accounting teams verifying contract rates. Each function gets targeted insights without sifting through unnecessary data feeds. This flexibility ensures manual interventions and it speeds up reconciliation and allows for a faster, more accurate billing, all of which support cash flow and improves your profitability. By automating these alerts and managing through exceptions, we can ensure that each team stays informed of critical issues and it's in real time, minimizing manual touch points and focuses on what truly drives your business, which is improving operational efficiency and ultimately driving down operational costs.
So we're kind of bringing in all the aspects of the other webinar here. And so we're going to, again, those other aspects were the supply management and the forecasting and inventory management along with dispatching and logistics. So driving financial accuracy really begins with effective supply management. So our platform provides a centralized data solution to manage both buy and sell contracts. And even if you are selling fuel, it's where you're delivering to. And this allows you to streamline and optimize your pricing strategies and buying strategies. So it includes direct connections to pricing data for market pricing, index optionality. We can even bring in specific supplier pricing if you have that as well. And really what this is doing is ensuring that your fuel costs and margins are accurately reflected and consistently updated as those markets change. So centralizing these prices or these pricing mechanisms really within the platform provides that complete visibility across all of the loads that you're going to go pick up, including the load codes. And it's really helping you manage each transaction more precisely. So this centralization extends beyond pricing to include configurable tables for freight rates, accessorial fees, and surcharges. And so with this integrated approach, you can really account for all costs associated with an individual load. And it can be from standard freight rates to additional fees and accessorial services such as a pump out. This allows you for that true reflection of cost at every transaction, which what we're talking about today is billing. So it's going to ensure that the billing or accounting team can work with accurate numbers. This also simplifies rate updates, so making it easier for changes in fuel prices, surcharges, unexpected operational fees, if you have to divert a load, if a supplier is out of fuel. Those changes are happening in real time and being fed directly into the billing and accounting teams. So all these data points contribute, again, to more accurate and comprehensive view of your cost of goods sold, and ultimately, again, that bottom line of profitability. So our dispatching and logistics solution is seamlessly connected with the data and information from supply management. And it further, that our solution of dispatching and logistics further supports financial accuracy by providing a centralized control over transportation and carrier management. We bring in transport, short truck, and again, carrier management together into one platform where you gain visibility into the entire logistics process from dispatch to delivery. So with real-time load information sent directly to your drivers or your carriers, your team can make on-the-fly adjustments to those routes or schedules or locations, ensuring that each delivery is optimized and ultimately tracked for cost and efficiency. And so the platform's real-time update capabilities ensure that all load data is immediately available for that reconciliation, improving both speed and accuracy when matching your bill of ladings or BOLs to invoices. So this eliminates many of the typical bottlenecks that we see that occur when reconciling delivery details, and ultimately reducing that manual entry, which we saw that from our poll, there was several that had manual entries. And it's minimizing the risk of error. And that's where the manual entry really happens, is when there's those errors from the transposition. And so using our platform with these real-time updates, it means that if there are any discrepancies within the data, again, quantity, pricing, delivery location, any data that's associated with a particular load, that can be identified and corrected immediately, preventing any costly adjustments later. So ultimately, it's this integration of supply management with dispatching and logistics on a single platform, where we can create a seamless flow of accurate data across all functions, from supply contracts to dispatch updates to the final invoicing. Every data point feeds into a single source of truth. This level of integration not only supports operational efficiency, but again, what the business cares about is driving that financial accuracy of profitability. And so with fewer errors and quicker reconciliations, again, your team can reduce, and we saw again in one of the chat responses, that rebilling, that accuracy. You can reduce that rebilling amount, you can improve your cash flow, and you can gain more accurate understanding of profitability across the business.
So let's take a closer look at kind of the integration procedures within our platform and how it drives the overall financial accuracy. So Titan Cloud captures the product that was ordered and the amount requested that was sent to either your drivers or your carriers. From there, we track precisely how much of that product was actually delivered, where it was delivered, and when it was delivered. This granularity of data allows us to reconcile the exact demand and the actual fulfillment, giving us an accurate picture of supply and delivery across your network. But it goes well beyond that, just the basic delivery details. We also capture critical information about where the fuel was lifted, the terminal location, the specific supplier, and the price paid at the time of the lifting. This direct connection of real-time pricing, whether it's market-based, indexed, or spot pricing, ensures that we accurately account for the cost of goods sold right from the start. By capturing the pricing data at the point of the fuel lift, we can reflect the true cost basis and ensure profitability calculations are reliable and very precise. Now, to ensure that every load is documented and verified, we're able to capture your bill of ladings or your BOLs and deliver information through a number of different channels. This versatility is really key because each carrier and each driver may have different ways of providing that support information. First, there's our drivers app, which allows drivers to upload BOLs and delivery details as they're working through their day. This data flows directly into the platform in real time, keeping everything up to date and then we offer functionality for third-party haulers where we have a dedicated carrier portal where they can enter delivery details, upload documentation, and confirm information around the deliveries. For even greater automation, we leverage APIs to connect with carrier systems directly, enabling the platform to automatically pull BOL. We're able to kind of pull that automatically pull that BOL information and the delivery details as soon as that delivery is made. We also support electronic BOL or electronic bill of ladings, allowing for a fully digital process that captures every detail every detail of the transaction without any paper-based delays. And if required, we offer manual transposition as a backup, providing a safety net for any data that may not be captured through automated methods. This end-to-end integration from order placement to delivery to the final reconciliation is what drives your financial accuracy. By having a single unified platform and source of truth for all product delivery, terminal, supplier, and pricing data, we ensure that every cost component is accurately captured and reflected in your financial reporting. When BOL and delivery data flow seamlessly into billing, the back office can confidently invoice customers without delays, adjust or costly rebilling processes. This comprehensive integration enables real-time visibility into cost of goods sold, accurate profitability analysis, and shorter cash cycles, all of which support the overall financial health of your business.
That's right. And so it's not only the integrations, we also, again, as we stated before, now we're showing in detail, we're embedding those freight rates, accessorial fees, and surcharges in each transaction. And this is, again, standard within our capabilities that we offer within our platform. And it starts with that supply management module. And so by integrating these cost elements directly into the dispatching and really the transaction process, we enable your team to determine exactly how much you should be paying or charging for freight every time. So it's not only valuable to have this type of precision, it's really essential to ensure that you have that accurate billing and payments. And so freight and accessorial fees can significantly impact your margins. And so without a system that automatically incorporates these rates, businesses often rely on estimates, manual calculations, or even just checking. And as we've seen in some of our polls, even third parties to do this type of reconciliation. So that all of that leaves room for error. So even a small discrepancy in freight rates or a missed surcharge or accessorial fee can accumulate into substantial financial impact over the hundreds, if not thousands, hundreds of thousands of transactions and deliveries that you're making. So by embedding these freight rates at the transaction level, we eliminate that guesswork and ensure that every delivery reflects the true cost. And so not only this embedding is a benefit, another major benefit is the streamlined communication between the departments. You now have a single source of truth. So there's no need to reconcile between systems or spreadsheets or third parties or chase down missing information because every charge now is accurately reflected from the start. And so this integration, along with the embedding of the freight rate tables and fees, really reduces the risk of data discrepancies, making collaboration easier and minimizing the back and forth that can delay that billing and payment processing and ultimately impact your bottom line.
Nick, and let's talk about the most complex aspect of the fuel and freight transactions, which is really the tax calculations. With multiple jurisdictions, varying tax rates, and frequent regulatory changes, accurately calculating taxes can be a time-consuming process and with a really high margin of error. Our platform takes the guesswork out of the process by automating tax calculations based on the lift and the drop information, as well as supply details associated with each of the transactions. Here's how this process works. If you think about every time fuel is lifted or dropped, our system records the exact location, supplier details, and product information. Using this data, we can automatically calculate the taxes that apply to each transaction, ensuring accuracy down to the cent. This is critical because even a small tax miscalculation can have a cumulative financial impact over time and may expose your business to audits and ultimately penalties. Automating taxes not only ensures compliance, but also enhances financial accuracy across every transaction that's being processed. Our platform also handles diversions, where fuel is lifted in one state but delivered into another, which often means that a different tax rate can be applied. This is a complex calculation that would otherwise require manual adjustments and frequent follow-up, especially when dealing with fuel deliveries across state lines. Our platform eliminates the complexity, capturing all required data and applying the correct tax rate based on the unique delivery scenario. Beyond diversions, our systems is configured to account for local jurisdictional taxes as well, including county and city specific fuel taxes. And it can apply them in real time as part of the transaction process. This granularity is essential as tax regulations are highly localized, and a simple misapplication can result in a significant discrepancy. Automating these calculations not only reduces administrative burden, but also minimizes the risk of costly errors that can arise from manual entry and multiple system handoffs. Automating your fuel and your freight taxes also creates an audit trail for your teams, providing transparency for both internal and external auditing purposes. With all tax details embedded in each transaction, your finance team has immediate access to the critical information that's needed. The tax details embedded in this gives your teams the need where they don't have to look at cross departmental systems, or they don't have to manually calculate adjustments, but they can use one centralized platform for all the information associated with these transactions, making audits a lot faster and significantly much easier. This ability to track and manage taxes in real time also helps streamline monthly and quarterly reporting, reducing the effort needed to ensure accurate tax submissions.
So again, once all the orders, deliveries, terminal locations, suppliers, prices, freight rates, taxes, all that, when that's captured, the next step is processing it through our exception management engine. And what this is a powerful rules-based system that helps both the dispatch and the billing teams identify any discrepancies in near real time and understand why those discrepancies occurred. So one of the standout capabilities of this exception management engine is its ability to bucket issues. It doesn't just flag that there's a problem, it categorizes each exception based on the reason. And so by organizing these issues, we're not only reducing that manual investigation time, but also helping teams quickly understand the root cause, which speeds up decision-making. And with all that relevant data in one place, billing and dispatch teams can make informed choices on how to proceed, whether that means adjusting an invoice, issuing a credit, or rescheduling delivery, or anywhere in between. And so we also have an added layer of accuracy that comes through our integration with our automatic tank gauges, which is really where Titan Cloud started off with 12 years ago, is connecting to those ATGs. And because we're connected to those ATGs, we have that real-time visibility into what's happening with your inventory at each location. So this allows us to verify that the correct delivery was made. And we do that, again, by checking those actual tank levels. And we can identify issues like cross drops, where fuel is delivered to the wrong tank or location, and even if there is a missed delivery as well. The integration adds an extra layer of protection, ensuring that inventory levels match what was invoiced and helping to avoid those costly mistakes and rebilling or paying something that you shouldn't have to pay for. And so, yeah, exactly, Brent. And so just to summarize everything, Titan Cloud was really designed to reduce the complexity and drive efficiency across the fuel supply, the dispatching, and billing. So our platform minimizes system complexity by centralizing all that critical data, such as orders, deliveries, prices, freight rates, taxes, accessorial fees, all into one place. And so this consolidation reduces the number of touch points required during post-transaction, as teams no longer really need to manage multiple disconnected systems and look at things manually. And really by having it all in that one system with that real-time data flow, we can reduce your days sales outstanding or days payable outstanding, or accelerate that cash flow, and just as a big picture, improve that financial health. And so we empower your teams to manage more sites with fewer resources. Again, through automatic tax calculations, embedded freight rates, and detailed exception handling, it really enables less resources. So Titan combines robust data centralization through our end-to-end platform and solution that has real-time exception handling and automation to reduce inefficiencies and improve operational performance. And so we address these core areas, and we provide a comprehensive solution that minimizes costs, enhances accuracy, and really enables your teams to drive value across your entire company.
I appreciate everybody's time and attendance today. Hopefully you guys were able to find value in the information we kind of shared. And certainly as a company, we'd love to kind of talk to you further, kind of answer any of your specific questions, any challenges you have. Certainly would look forward to those questions and opportunities to further discuss in future discussions. So thanks everyone for your time.
Thank you, everyone.
Again, yep. Have a great day.